I am going to I am going to tell you about what is repo rate, and this question they will ask: how Reserve Bank of India is controlling inflation, or what is repo rate, etc. They will ask. Please listen carefully. Reserve Bank of India Monetary Policy Committee meets once in 2 months and decides about the repo rate and other rates. The Reserve Bank's policy is the inflation should be 4% plus or minus 2. They see they will consider it not a good sign when the inflation goes below 2% or when the inflation goes above 6%. Accordingly, the repo rate, when the inflation goes up, the repo rate will be raised. When the repo rate is raised, other rates like bank rate, it also will raise. So what is repo rate? Repo rate is the rate at which Reserve Bank of India lends money to scheduled commercial banks for short term. Short term means 14 days to 90 days. But don't commit about this. No book is very clear about that. Simply say short term. Then there is one more rate known as bank rate. Bank rate at present it is 6.5%. Bank rate is the rate at which Reserve Bank of India lends money to commercial banks against government securities. The rate now is 6.50. This is for long term, more than 90 days also. Then there is one more facility known as marginal standing facility. Banks borrow under repo rate for short term. They borrow under bank rate for long term. But sometimes beyond this, some emergency requirement may come. For that, they can use another concept known as MSF, Marginal Standing Facility Rate. That rate is also same, 6.5%. This is for emergency, 1 day, 2 days requirements, this marginal standing facility. There is one more concept known as standing deposit facility that was introduced in the year 2021. But now it is not much of a use because banks are not having surplus funds. Marginal standing deposit facility is a facility whereby banks, when they have surplus funds, they can park it with Reserve Bank on their request, on their approval. Reserve Bank should approve. Then in that case, RBI will pay interest of 6.25%. Sorry, now it has been reduced to 6%. Previously it was 6.25. Now it has been reduced to 6% because repo rate is 6.25. And this one standing deposit facility, the rate at which RBI gives to commercial banks is only 6% now. Why I am telling it is not relevant now? Because banks are not having surplus funds nowadays. In fact, many of them are borrowing from the market as bonds and other funds. Apart from that, the last rate I have to explain is what is that? A reverse repo rate. Reverse repo rate is the rate at which banks can keep their surplus funds with the Reserve Bank. That is now 3.35%. But now, again, this is not relevant because banks are not having surplus funds. So these are the important details about, say, the repo rate, bank rate, then what is the other one? Marginal standing facility rate, standing deposit facility rate. The last one is reverse repo rate. This is a very important one. Please watch this once or twice. Take notes. Remember, commerce students will be asked this question in interviews in banks or insurance companies. This is a very important one.